Ladies and gentlemen, Kei Kim here. Welcome to the weekly update. Hope you guys had a good day trading today. Market is down about 0.6% there. On the S&P Nasdaq down 1.1%. Semiconductor did the same. Dow down 0.6% along with the Russell 2000. Transport also. Banks is green today. Energy down 0.6%. Biotech down 0.7% along with the healthcare. Home builders looks like flat also. Utility slightly red. Retail down. Emerging market down. Bitcoin down about 4%. Gold, silver, miners, they're flat, slightly green. However, the miners did get that downturn today about 1% negative. Dollar up, oil up, treasury bond up. VIX is slightly down there. Let's stick with the S&P 500 ETF Spider. However, in this weekly, the weekend video, we're gonna also look at, not only gonna look at Spider, we're gonna look at gold and Bitcoin. And we're gonna look at the big picture of things. It is all coming up right now. All right, so let's start with the S&P 500 here, the Spider. And we've been actually tracking this rising pivot and the support since couple weeks ago, right? So again, as you guys remember, I drew this support here and the rising pivot when this thing fell earlier this year. And so we initially bounced, as you can see right here, right? We initially bounced, was not able to fill that down gap. We talked about the down gap must be filled if the bulls want to go after the new all-time highs. That down gap acted as resistance. And bulls tried a couple times here. So one time, second time, little double bottom there and came right back in. And looks like retesting that pivot, coinciding with my long-term moving average. Here you can see that pink moving average. And keep in mind though, we're looking at the daily chart, right? We're no longer looking at the 65-minute chart. So we're looking at more of a big picture of things. That pink, my pink moving average, as you can see, it goes all the way back. And it's been acted as a strong pivot. You can see right here. This was back in May, I believe. You can see that May acted as resistance for a couple, several weeks or so. And then it flipped back. Do you see it right here? And then it acted as support around June. You can see that right there. Hit it twice here, came down. Buyers were to bring it back up, came back down, retested. So that's kind of what happened. That's the important part. What we have to understand when I say pivot, it's different from just normal support level, because a pivot really means what acted as, resistance in the past, as you can see right here, is flipping back and acting as support, right? So you can see that long-term moving average does have, it has importance. It is significant with this presence, because we can see that back in May and June, it acted as strong support. And keep in mind though, that was a level when we're trading at around 2,7,300. And that was a pivotal level, and sentiment was extremely, extremely bearish. And overall, at this vicinity, I think because we have the long-term moving average in that vicinity coinciding with my pivot and the uptrend support, and not to mention we have my Fibonacci here, my first level Fibonacci. You can see that wick here hit my 50% retracement, and then we initially bounced, coming right back down. Keep in mind though, my short-term moving averages. So we just talked about my long-term, but what about the short-term moving averages? Because those short-term moving average is what making things difficult for the buyers. You can see that short-term moving average right here, that light, is it green or blue? I don't really know, but light green or blue color, their moving average, and then my kind of a midterm, the pink dotted, which did act as support in the prior, like late last year, and then is now supporting the bears. So some of these guys are all curling down, while my long-term moving average is still rising up. And you might ask, what does that mean, Kay? It means Sentiment is bearish in the short to midterm, while the long-term sentiment is still bullish. It means benefit of the doubt goes to the sellers in the short to midterm, but benefit of the doubt goes to the buyers in the long term. Comparing this 2008 price action, potentially insinuating that the market right here, we're topping out. 2022 is going to look a lot like 2008 when we had that real recession, the financial crisis. Trust me, I've seen people do that in 2012. People did that 2014. People did that 2016. People did that 2015, 17, 19. They do that every single year, and they fail miserably. So I don't pay too much attention to that kind of things, because I have reasons to believe that we're completely in a different sentiment, or as far as when I'm not talking about just this pattern itself in the midterm, but more like we're talking about looking at things as secular and the macro, fundamental and a technical and the psychological aspect of this market where we're at today versus back in 2008. So it's foolish to just kind of put these two moments together, and there you go, and we got now we got the jackpot, and then this market is gonna crash down 60%. That's how a lot of people you know what I'm saying, not understand the macro sense of things. Is how you're gonna not only miss out potential huge rallies to come, and you're gonna lose a lot of money trying to short this market and trying to go for that jackpot YOLO some crazy short and puts and they just, you get wiped out. So I don't believe here in 2022 we're in the same level or same sentiment as to 2008. Two different market sentiment, two different market tone as far as a secular and macro trend of things. If you're just looking at just this, trust me, we had that in 2011, 2012. We had that 2016, and a lot of people thought 2015, 16 looked a lot like 2008. And then there was like 2018, people are also saying that today. I don't believe so. So obviously this gap right here, 460, that gap must be filled. As long as this gap is open, bears will try to continue to bring it down. So, but keep in mind though, we are at support. You can see even this support hasn't broken yet. Got the lower wick here, we're just right on it. But sometimes when a lot of people are looking at the same level, same support, what the market is going to do is going to break below it, just so that people are like, oh my God, look at that. There you go. There you go. We broke below that. We broke below the support. We broke below the pivot. We broke below that long-term moving average that Kay was talking about. That's it. This market is like 2008. We're going to get in a recession. And once market conditioned the public to think this way, that's when the real reversal occurs, and this market gets back up in a rush, in a hurry, and then you don't know what hit you, left you behind. All of a sudden, S&P is up like spiders at 500 or something like that, and you're just dumbfounded. How many times have you gone through that in the last couple years, maybe last 5 years, right? Let's go to gold here, because I know what happened to gold is that for the first time, right, since September of 2020, we're breaking out here above this falling resistance, right? And so, but what's important right now is really this pivot right here. I mean, that swing high peak. This is you know what I'm gonna do? I'm gonna make this red because I want you guys to. This is a very, very important level, and I'm gonna make this thick right there. So 178 or so, we gotta give some wiggle room. So 180, right? 178, 180. This is a level that bulls must reclaim. Let's put in some of these gap areas also. So now that bulls might be going after the new all-time high levels here. So let's put in some of these gaps here so we can track it as the market potentially, gold market potentially make a move to the upside. And also there's a gap right here. That's probably why we're stalling. See that there's a gap right there, right? So 178, what the buyers really need to do, that higher high is not going to be enough right now, because the reason why is we both made a nice move here, but there's no cultivation of an uptrend. It just went straight up, right? You can see straight up, straight up, straight. A lot of these straight up moves is actually very much vulnerable. Just check out your COVID stocks, right? All those stocks just went straight up, right? In 2020, what's happening right now? Crashing back down because it didn't have a proper uptrend. So for gold market to cultivate and establish a proper uptrend is to go up and come down and then have its higher highs and higher lows. And this is a nice base, right? This is how bulls like to operate, right? They like to kind of absorb some of these volatilities, right? Keeping it low, exhaust the bears, the sellers, and then they take their time. We're talking about the buyers. Take their time. And then when the time is right, they break out, right? But just straight up move isn't going to cut it because bears can just bring it right back in because that's what they've been doing since 2020. So they need to definitely cultivate that higher high. For the first time, we need to get that higher high first. And then let's worry about the pullback, the higher low, all that. So the higher high is going to be this is going to be a midterm higher high. We do have a short-term higher high with this. And that's better than nothing. But we need that midterm higher high by getting above that 180. So we'll kind of see what happens next week. Let's go to Bitcoin and see where it's at. We'll end the video. So Bitcoin initially made a move, but my midterm moving average was right there to kind of catch it and bring it back down. It is not a coincidence. It is not a mistake. It is not an accident. It's not a random occurrence. What has happened here, it is happening again here. This is why, remember when I did this spider, when I kind of went back and checked what my long-term moving average did? Remember, I went to like April and June or May and June because of this, right? You can say, well, that's just randomly occurring. You can see what act as resistance here continues to act as resistance. It doesn't mean it had to happen this way. We could have blew through that today or, this week, but it's a higher probability. Just because it's heavy look here. We're already coming down. The wind is blowing to the downside. And you can see I'm going to remove these. So now it's starting to look a little bit more hectic here. And we got another down gap. There's a little up gap there. Obviously, good news is that right now, that primary uptrend is holding. And that's a must-hold level, right? And that's obviously coinciding with that neckline here. This is a level. And let's give it wiggle room, right? This entire band of support, bulls must protect. And turn that into some sort of a consolidation, not like a topping pattern. And then can't go back up and potentially continue with this uptrend. But we start breaking below and start cultivating the lower highs and lower lows. Things get extremely, extremely difficult, even dangerous for Bitcoin buyers. You guys be good. Without me all next week, I'm going to come back for you on March 1st, Tuesday. We'll reassess the situation. Enjoy your evening. Good luck trying next week.